Welcome to Good Money Moves, the show where we share financial tips and advice to help you feel financially empowered. I'm Jenna AVP of Marketing here at First Alliance Credit Union. And joining me today is Andrea Allen, our CRO. And I'm going to let her tell you what that is before we dive into our topic and just share a little bit about yourself and kind of your role here at the credit union before we talk about our big topic for the day.
Absolutely. So like Jenna said, Andrea Allen, Chief Revenue Officer. So really what my team that I support works on is anything that really touches a member. So loans, accounts, and kind of just monitoring the stewardness of our members' money.
Mm-hmm.
You know, what do we have coming in? How are we going to best spend that money in order to advance services and stuff like that? So really any interaction with a credit union is kind of part of the team that I help support.
Yeah. So just like everything.
Yeah.
Well, thank you so much for being here again. You're a font of knowledge, and I know that this is a very important topic for a lot of people. It can be really, really scary when you lose your job, which is what we're going to be digging into today, is just kind of maybe the steps that you can take if you have lost your job. There's a lot that comes with job loss. That's not just whether or not you're going to be able to pay your bills, but you know, the benefits you might lose and kind of what are the steps you can take to make sure that even if you are in that position, that you are making the right financial choices for yourself and your family to stay afloat. So let's maybe just start at the beginning. Let's say, you know, you've lost your job and it's maybe the first 24, 48 hours, first couple days since this happened. What are maybe some of the very first decisions or things people should be or should not be thinking about or prioritizing financially at that point?
Yeah, that's a great question. And I would say the first 24 to 48 is probably the time to not make a lot of decisions.
Oh.
To really just take a step back. It can be obviously an emotional time. You've got a lot going on and it can feel very overwhelming. So it can be really helpful to be sure that you stay grounded in just kind of level things out, take a breath, and just start gathering a little bit of the data that's going to help you know what next steps to move.
Mm-hmm.
But just being really sure you're not making any knee-jerk decisions that could maybe make some financial impact down the road or tie your hands in a way that maybe you already moved this needle and it's hard to step back and look at it holistically now.
Sure. And when you say, you know, certain pieces of data, you're talking about, you know, checking your online banking, like looking at the bills that you maybe have coming in and, you know, where do you maybe still have some income coming in if you have, you know, a spouse that's still working, and kind of just looking at those pieces of the puzzle out the gate.
Exactly. I would say out the gate, you maybe just want to start collecting stuff that helps show you what your cash flow looks like. So what income can I still anticipate coming in? Am I going to work with my employer on some of those pieces on what I can expect next? And then really gathering maybe my statements or my credit card reports and any of those things that kind of show you what your income may be and what those expenses are going to look like, so you can really look at everything together.
Yeah, that's really helpful because, I mean, to your point, I like that you bring up kind of just taking a step back and not making those emotionally driven decisions, because I think, to your point, that's where people get in a lot of trouble. And job loss is very emotional. I mean, especially if you've worked somewhere for a long time and then you've been let go, you know, it doesn't really matter why or how it happened. It still doesn't feel good no matter what. So from a money perspective, you know, you've taken some time and gathered some of this information. You've dug in and kind of understand your cash flow. What do you do from there? What's the next kind of priority once you've kind of maybe had your emotions come down a little bit and now you have to try to figure out, okay, how do we move forward?
Yes. So once you have that information in front of you, I think some next steps would really be looking at maybe some rebudgeting. So just, again, really putting down everything in front of you at what I have for options. And then they just really need to prioritize.
Yeah.
And what your household looks like might depend on what those priorities do. But usually you want to start with food and shelter and utilities and transportation, some of those essentials to take care of you and your family. And then let's look at what we have for maybe debt obligations. And then making sure we're being proactive and reaching out to our lender on what we have going on to be sure we can get in front of what our options are instead of waiting until it might be a little bit too late.
Yeah. So it's, you know, it sounds like, you know, making sure kind of those staple things that you need no matter what, you know, food, housing, transportation, those are all things that you really can't live without. Obviously, food you can't live without. Right. And kind of prioritizing it that way. When it comes to looking at a budget, you know, what are maybe some other bills that you want to make sure that as you're kind of thinking through and prioritizing, like obviously We talked food and housing is top. Maybe what are some of those ones on the bottom that you're like, if you don't have the money, you don't have the money,
Yeah.
and it might be time to make some different decisions. Like, what are some of those?
That's a really good question. Some things that I've seen before too is that sometimes the things that are just conveniences versus necessity are some of the things we might need to back down from. So maybe it's convenient for me to DoorDash dinner in tonight. However, how much did I pick up on extra expenses, and how could that money have went further if I went to the grocery store and meal planned out for a week? So sometimes the things that are just convenient or faster are often more expensive. We're paying for that convenience.
Yeah.
And now will be the time to say, do I really need this, or is it something that's just a convenience right now? Some things that you may need, however, can also be rebudgeted, would be cell phone bills are a really good place to look at. Contacting your cell phone provider and seeing what you can save on potentially there, or is a different provider potentially going to be more cost effective to you, and know what that option looks like as well. So some of just those pieces, even insurance. Insurance is some of those things that, like an auto insurance or homeowners insurance, that we get out of the gate, we kind of set it and forget it. However, shopping for insurance can be a big money saver as well. If you haven't done that for a while, I would suggest doing that as well.
Yeah, even if you haven't lost your job, because you never know what could be out there. And I think, that's a really great point that you bring up, because I think that's maybe one of those things that people don't think about is, maybe you just, even though you don't want to have to put more risk on the line, upping your deductible can lower your payment, which can get you through a tough time without having to sacrifice having that coverage should something happen. And typically auto insurance, homeowners, you have to have it if you got a loan, right? And you want it for those bad moments that happen, unfortunately. But to your point, I think there's so many little things and kind of strings that you can pull in your budget where you can still have the things you need, but you are kind of just reassessing how much it's truly costing you.
Exactly.
Yeah. What are maybe some of the more common or bigger mistakes people tend to make after job loss that gets them into more of a financial pickle than if they had just maybe slowed down and thought through different or reached out for advice or something?
Yeah, I would say probably a bigger one that I notice is avoidance. And sometimes because it's just a difficult situation, and we all react differently to stuff like that. Some people go really internal. I don't want to talk about it. Maybe I'm embarrassed about it.
Yeah.
So I'm going to see if I can ignore it until I figure something out, which is understandable feeling that way. I think it's important to remember that this is a moment in time in your life. It doesn't define everything else that's there for you in the future. So the more that you can level set right now and prioritize and just be open and honest with your lender specifically, or your utility company, say, be proactive. Don't wait until you've missed a payment to get into contact. Get into contact in advance to say, here's what I have going on. I'm concerned that I'm not going to be able to make this payment. And a lot of your partners are going to have solutions for you that are going to be like, maybe just push it down. You could do a skip a pay or something like that. Once you're already late, though, it becomes a little bit more difficult to talk through that. So just be proactive and get in front of missed payments instead of waiting until someone reaches out to you because it's missing. Yeah,
I like that you bring up being a little bit more proactive about the process, because, to your point, you never know what kind of solutions or helpful tools or resources that, your lender or the utility company or, other, depending on who you owe money to or making payments to, can have to help you kind of get through that period, knowing that it is going to be temporary. Most people don't lose a job and stay unemployed forever. It can take time to get back into, being employed, but it is a temporary situation. And most people understand that and have ways to help people get through that. I know that we work really hard here at First Alliance to help people, stay on track with their loan payments and credit card payments, things like that, when they come to us through that. So, what about health insurance? That is a huge one that we haven't talked about, that is usually tied directly to someone's employment, and that's a scary one to have, especially if you do have, medical conditions that do cost you a lot of money. And I know this is something you typically have to work with your employer on, but maybe talk a little bit about that and how that can help kind of bring that budget back in line, and what does that look like?
Yes. You're right. Primarily, a lot of us get our health insurance to benefit through our employer. So in addition to talking about any of those benefits, that should be a conversation you have with your employer as part of exiting that organization is knowing what benefits of yours are still in place.
Yeah.
When did those benefits end? And what would it look like for you to be able to extend any of those benefits? So on the healthcare area, that's usually called COBRA, where if you can get an extension on your employer's health insurance for a period of time, but also just knowing the timing of it. Insurance oftentimes will last for a month. So if you maybe got let go earlier in the month, that coverage is likely still going to cover you potentially for till the end of that month. So now you can maybe buy yourself a little bit of time. You could look at COBRA. You could get out into the marketplace. I know health insurance can be very expensive, but there's also a lot of tax subsidies and things, so you can look at that through the marketplace. Maybe your state has a specific program like Minnesota Care or something like that that can help supplement that as well. Or if you have a spouse and they're employed somewhere, losing a job can be called what they call a triggering event, which would allow your spouse to make mid-year adjustments to their benefits as well. Usually you can set up for health insurance during that one time of the year, but there's a life event like a change of employment or something like that. Your spouse could likely get you added to their benefits of their employment as well.
That's a really great point that I think a lot of people probably don't think through too, is that, you know, if you do have that spouse, you can lean on them as part of the solution to this problem, because that's the whole point of having a spouse, right? Is somebody you can lean on and kind of work through these things with. Let's talk a little bit about, well, the elephant in the room, unemployment benefits, right? If you lose your job, talk a little bit about, you know, not everybody always qualifies for that. If you do, you know, who do you go to? Does your employer help you through that? You know, how can it impact the budget that you're working with, or not impact it if you don't qualify for them?
Yes. I would say, to your point, something to do early in the process is to file for that unemployment benefit. Typically, if you're let go due to no fault of your own, you're going to qualify for unemployment. The best way to know, though, is just to get out there and get the process started. Even if you have maybe some slow pay coming in, that doesn't make you ineligible to start applying now. So get out there, get the application process in play. If there is any sort of dispute potentially with it, the employer is like, no, they don't qualify because of this, the state will help you go through that process. If there's any dispute on whether or not you qualify or not. And then if it came to it, the worst case scenario, they could put you like in front of like a phone call and a judge with your employer and them to determine, are you really eligible or not? However, that should really only come into play if there's some sort of fault, if that makes sense, that's tied to the losing of the employment. Other than that, you should have some good options there and apply sooner than later.
Yeah, and maybe you don't know the answer to this, but unemployment doesn't necessarily bring in the same level that you were bringing before. It's a percentage, correct? And so you are still going to have some level of reduced income even if you qualify for unemployment benefits. And and I'm assuming then you just kind of factor, if you do qualify, you factor that back into that cash flow we were talking about before as kind of that stopgap to just ensure that you have coverage for all those bills and things like that. It's essentially your income for the time being.
And I'm not an expert at the state level on all those numbers. To your point, though, you're right. It's not going to make you 100% whole, and it might determine on some of those pay periods that led up to filing, because it does like look back period to see how much you were making. So that could be impactful. For example, if you are a seasonal employee, but you maybe weren't making as much leading into being laid off than you were before. So just some of those pieces too, and what that income window looked like prior to the termination or the exiting of that employer.
No, that's really a great point. You know, the other thing that I want to talk about as we're kind of talking about cash flow and the income that you can be using is if you have a lot savings saved up, you know, is losing your job a good time to start to dip into that? And if so, you know, how far in should you try to still leave a buffer there? You know, if you do have a really well-funded emergency account, like talk through kind of determining whether or not to use that savings and when you should maybe bring that into play.
And emergency savings is for situations just like this, which is why oftentimes you're going to hear the key word tied to an emergency savings in the form of number of months of salary. So I might say that you should have 3 months of income saved away. So in the event that something happened, you have 3 months of income to live off of on that emergency savings. And that is, if you were able to set that plan up in advance, is hands down the time that you should be using it now. It's not likely the time that you're going to be saving, but you're going to be drawing on savings. So something to do now is always any of thing could happen to any of us at any given day. So if you have the ability right now to put some money away, start that emergency savings, give yourself some milestones on how to grow that. And then once you have like that 3-month window, that money should be there. This is truly for emergencies, and I'm not touching this except for emergencies. And now is the time to do that.
Yeah.
What I wouldn't suggest is dipping into your IRA savings, your retirement account, because those are often going to come with taxes and penalties, and there's going to be other situations tied to that. That's not to say in the long run that you can't use that as a resource. It just wouldn't be my first resource.
Yeah.
And I would definitely take a pause and go through all my other financials and my opportunities before I would ever entertain taking it out of a retirement account.
And I'm really glad that you kind of brought in kind of the differentiation between those things, because I think, you know, if you are in that situation where maybe you didn't qualify for unemployment and now you have all this really high cost health care that you maybe need to fund, it can be really, really alluring, if you will, to try to dip into some of that, especially if you do have a 401k that has some money in there. But to your point, it should be like a very, very last resort if you ever do it, because it is so detrimental down the road for something that is truly more of a short-term problem. So much that we could still cover here. We are starting to run out of time, so I do want to talk a little bit about and circle back around to how the credit union or another financial institution even could help you through something like a job loss. Like, what are some of the things that we offer members on a regular basis? I know you mentioned skip a pay earlier, but what are some of the other things we can do to kind of help people through this process?
Yeah, we could be really helpful in budgeting, from the budgeting perspective, financial counseling from a certain perspective on what should I prioritize. And now I think prioritization is really individual, if I'm going to be honest. However, sometimes you're like, should this be a priority? And can this wait? Or what can wait? What will be most detrimental for me and make it wait? So I think we can give that advice on maybe what we can help you prioritize. Budgeting tool is one of those, I think people almost think of like, they hear budget and like, it's cringy. No one wants to do it. It's kind of like, you know, looking at yourself in the mirror sometimes, but going through your account at every one of those expenditures and being truly honest with yourself can be a painful process, because you're like, we don't spend that much money. You're like, yikes, we actually are spending that much money. So you just have to be willing to be very self-aware and to get into some of those nitty-gritties to admit that maybe there's some corners that we can help shave ourselves. And then once you kind of get past where we can maybe narrow things down from that spending perspective, then working with your lender on loans. Again, we can look at potentially payment deferments or skip a pays, or maybe we could do some interest only. So we have a different avenues we can do depending on what your unique scenario is. And I'll just stress it again, like I said before, just be sure to do that before you start missing payments.
Yeah.
We don't want you to get yourself into a situation where it's going to be, once you get a job again, it's going to be hard for you to continue to get access to credit because of where things went. So really important to do that. And from a financials perspective, obviously we have an obligation on how we handle delinquent loans and those sort of things. And whenever we can say that someone's talking to us and they're working with us and we know what's going on, it allows us to be so much more flexible than what's expected from a financial. If someone just isn't paying us and we don't know where they are and we don't know what's going on, then our expectations are to have to kind of move that ball faster too.
Yeah. No, I love that you bring up just the proactive nature of it, because it can be really hard to like admit that you're struggling with something, but at the end of the day, like, we want to help you through that. And we can't help you through it if you aren't talking to us. So I appreciate that you brought that back up. What is maybe like some last minute parting tips or advice that you have for somebody who's going through a job loss situation right now, and like just tips and advice that we haven't talked about yet that are really important?
Yeah, I would say mainly just know you're not alone. This is what people go through. You know, we go through troubling times. You're not going to be the only person to ever lose their job. So just know there are resources available for this. From assistance programs, the state level, local level, what your financial institution can help you with, and guidance. So just know you're not alone in this, and don't worry that right now is going to be something that you're stuck in forever. And just get the right people and the right tools on your side out of the gate, so the short-term situation doesn't turn into a long-term one.
Yeah, beautiful. Thank you so much, Andrea. Again, this has been really helpful. I think Hopefully you learned something new and this has been helpful for you as you tuned in. So thank you so much for joining us. This has been Good Money Moves. Make sure that you like and subscribe so you never miss an episode. And if you want to learn more about money management or what resources you have available to you if you've lost your job, make sure you check out our website, on our blog, other YouTube videos. Again, this has been Good Money Moves. Thank you so much for joining us. And until next time, stay financially empowered.